Okay, so welcome to the next session of intellectual capital management. And you remember we talked about that how we are going to measure, and then we talked about the various models in session 3 as well as session 4, and then we see that how various researchers are using different kind of indices, starting with technology broker, then we have Swaby's model, then we have used the other models like how we are going to use economic value added model to understand the organizational performance, and then how we are going to use market value added, that how much value is added when it comes to measuring market value of an organization since its inception, and then how some companies specifically are using weighted average methods to calculate the intellectual capital, right. Now, when it comes to identifying various capital and various assets, we must understand what are the various assets, different kind of assets that could be measured, right. So, in here what we are going to try to understand is that what are the different kind of assets that we have and how we are going to measure it, right. So, to start with, first of all we discuss about various type of assets, okay, and then what are the valuations that is used, valuation methods that is used for these kind of assets, because when you are talking about understanding, measuring and creating intellectual capital assets using different capital. So, basically these capitals could be identified into three different kind of assets, right. As you remember, we talked about intangible assets, that is one part, okay, which is qualitative. Then we talked about tangible assets, which could be quantitative, basically that is how we are going to identify the financial measures, okay, and that is reflected in your book value that you can see through your balance sheets, right. Then there is another kind of assets that is used, which is invisible, because these kind of assets are usually not known. You need to explore these assets also. Okay. So, when it comes to identifying various kind of assets that is to be valued, it includes three kind of assets, that is tangible assets, okay, first, which I have already talked about. Okay. Then we have intangible assets, second, and you know the difference between tangible and intangible assets. So, we will discuss about it. Okay. Tangible is more financial in nature, and intangible is non-financial measures, and you know that some of the models talk about that you need to include both tangible and intangible assets, okay, because tangible assets talk about book value, while intangible assets talk about the market value. But in addition to this tangible and intangible assets, we have one more kind of asset, which is invisible assets, which is different from the two, but it could be also put into the category of intangible assets, but it is little different, right. You know that as HR professionals, you must understand what are the different kind of assets that a company has. You may do not have a much role when it comes to understanding tangible assets, because it is clear, okay, but when it comes to exploring, understanding and improving intangible and invisible assets, as HR professionals you have major role to play, and that is where we are going to plan certain interventions to ensure that the index of intellectual capital improves, because it does not only depend upon tangible assets. So, what we are going to discuss here is that these three type of assets one by one, what does it include and how we are going to measure and value them, right. So, moving up, first of all we will talk about the first kind of asset, that is tangible assets. Tangible assets we all understand, okay. These are basically fixed and current assets like land, equipment, stocks, debtors, bank deposits, everything which could be measured financially, right. So, but that is basically a property of the organization, okay. So, organization has different kind of assets, okay, maybe bank deposits, what is the property that it has in terms of lands, equipment, stocks, okay. So, all kind of things can be are going to create an asset, provided you are going to quantify them into monetary terms. So, you will be able to calculate the value of tangible assets, right, and it is easy because of it can be done through traditional accounting measures, right. For example, if you even look at the balance sheet, you can find out the value of different kind of deposits, also assets, tangible assets actually, right. Now, you know that if you look at the balance sheet of the companies, which shows assets and liabilities, and if you look at the left hand column, you can see what is the various tangible assets that the company has, right. So, understanding and evaluating or measuring tangible assets not very difficult, because the value can be calculated easily, and if you sum it up, probably you will be able to create the tangible assets for the company, or you will be able to identify provided you have all these tangible assets and you are able to measure them using certain financial measures, right, through accounting procedures which shows the assets and liabilities, right. So, that is the first part, that is what we call tangible assets. Now, what is more important for an organization is not tangible assets which shows the book value of the company. What is more important is the intangible assets, because not many organizations have made attempt to reflect it on the balance sheet of the organizations, right. Now, few Indian companies have started apart from other companies in developed countries. So, if you look at the second part, that is intangible assets, that is more important for the organizations, because it helps you to create better value for intellectual capital, and that is how it is going to help you to improve your index of intellectual capital, right. So, when we are going to talk about intangible assets, it includes what? Okay. It could include everything. Okay. It could include your different kind of capital, it could be related to your relationship, customers, social processes, social capital, it could be also related to various kind of activities which organization does. Okay. So, all of them could be a part of what you call intangible assets. Okay. Like renting in licenses and franchises. So, you are because if you are going to be an agreement with an organization for licenses, franchises, you have created it. So, that is though it could be a strategic move on the part of the organization to create value for them, but it also has a value. Are selling I mean you are allowing other companies to use your brands. For example, McDonald and other companies, though they have franchises in India or KFCs. So, what you are doing, you are adopting certain processes that is created by them and selling in their names, right. So, that you can create value for the organization and you can grow, right. So, these kind of assets are known as intangible assets, right. So, if you look at intellectual capital is intellectual material knowledge basically, which is very difficult to measure using certain quantitative measures, right. Like what information, what is the intellectual property of the organization in terms of products and these kind of things, or experiences that people have. Okay. So, because this is going to create you wealth, it is not only the equipment, the processes and these kind of things that is going to create value for the organization. But basically the competencies of the people, what kind of intellectual properties is created, what is your effort that you made through R&D in creating products and processes, which is going to help you to create wealth. So, all this is part of what you call intellectual capital, right. It includes like intellectual property, trademarks, patents, reputation, networks, even databases. So, if you remember, we talked about various components of intellectual capital which creates market value, right. I am not talking about book value. So, everything that is associated with intellectual capital in terms of human capital, you can use various indexes and organizational and infrastructural capital, customer or relational capital, and then social capital. All of them could be a part of what you call intellectual capital, intellectual assets, intangible assets. Okay. So, when we are talking about intangible assets, the idea is to create the market value for the organization, while tangible assets create book value for the organization. I hope that it is clear to you the difference between intangible and tangible assets. Now, third part that we are going to discuss is invisible assets. Okay. Most of the cases organizations do not focus upon invisible assets, which may be very important, right. So, when we are going to talk about capabilities of the people, the experiences, okay, what is there in their mind especially, right, the tacit knowledge, that could be part of what you call intangible assets, okay, which might be put to use to create value for the organization, right. Now, one problem that we see with most of the intellectual capital measures, that they are going to rely mostly on what you call either book value of the company to start with, that is the traditional measure, or they are going to rely more on intangible assets to create intellectual capital index. But most of these intellectual capital indexes become part of what you call intangible assets. Now, part of this should also be included as a part of this intellectual capital exercise. When you are going to create index, you also need to create these invisible assets, right. Something say the knowledge, tacit knowledge that is with the people are in their minds, which is not explicit in the form of say in an explicit form, say documents, papers, videos or whatever it is, right. So, the capabilities of the people are capabilities of the organization which is hidden from the view, because sometimes it is not known, okay. May be part of what you call invisible assets, okay. And there has been an attempt to include these kind of assets as well to be a part of what you call market value. Okay. So, when we are going to talk about capabilities which could be called invisible assets, okay, that we have been discussing about it. The problem with this is that how are we going to assign value to these invisible assets, right. For example, whatever knowledge is there in my mind, okay, as an individual, can it be quantified? Okay. You can quantify the value of a book that is written by me, right, that the worth of this book is this much. So, you can value it, but whatever knowledge, tacit knowledge which is not been explicitly created, it is very difficult to assign value to this kind of knowledge, right. So, and that is why it is very difficult to value. Second point this related to is that it has limited capacity in the short term, but unlimited capacity in the long run, in the sense that the knowledge and skill that people have, or how this knowledge and experience and skill is used by people to bring about changes, okay, in the organization, in the performance, that is an invisible asset, because it is very difficult to measure these invisible assets related to say experience, insight, intuition, okay, the tacit knowledge that is there with the people. Okay. So, this is one problem, because in the long term it is very difficult to measure it, though short term you can say okay, this is the basis of your knowledge, this is the kind of knowledge that you have, once it is made explicit, right, otherwise it is very difficult. Okay. For example, it includes the skills of the individuals, the processes, the interactions that goes on through various resources, how people coordinate their activities, okay, how successful team works, right. And then what kind of culture organization has, what is the level of trust that you have, okay, how you manage your say employees, your strategic partners, allies, these kind of things, because it is not very easy to measure the quantified value of these assets, right. For example, how are we going to say measure the value of culture of the organization, because it is very qualitative, right. Though you can name them, okay, that this organization has a good culture, a strong culture, it has a marketable culture, it has an entrepreneurial culture, provided looking at some of the indicators like R&D, number of patents and copyright that is created, right. So, you can say that yes, this is an organization which has an entrepreneurial culture, right, and if you think that the organization is doing well, you can say that yes, company has created a market culture. Simply if the company is very rigid in systems and processes, you can say that it has a bureaucratic culture, right. So, in that way you can identify the kind of culture an organization has, whether it has a market culture, a bureaucratic culture or an entrepreneurial culture. But the problem lies here is that how are you going to quantify them to create a value for the organization. Okay. So, what you are going to do? You are going to rate them. You can say okay, entrepreneurial culture is the best culture that an organization should have. So, it should have more value. Then you can say that market culture is also good, because it helps you to capture market share, increase your performance and these kind of things. Similarly, the worst is bureaucratic culture, because it hinders your systems and processes to work smoothly and effectively, right. Are you getting my point? So, what I wanted to tell you, measuring culture, skill and experiences, insights and intuitions of the people is very difficult quantitatively. Okay. Maybe in the short term you will not be able to understand the value of these things, but probably these are the things which make up an organization in the long run, and it does create value for the organization. Okay. So, these things have been created through a process, and now they have become a part of the capabilities of the organization. Okay. For example, if you have created an entrepreneurial culture in the organization, right. So, you are going to create a capability for the organization which is going to be high on innovation, right. So, this is going to be directly linked with the innovative capability of the organization, right. So, entrepreneurial culture, innovative capability, that is how we are going to look into it, the relationship, right. But this is an asset which cannot be quantified or measured in monetary terms, provided you develop certain measures which is going to help you to do it. Okay. And that is where while you are using certain traditional accounting measures to measure the tangible assets, or you are using certain scales to measure intangible assets, you also try to consider, incorporate invisible assets, that what kind of capabilities have been created by the organization to create or add value to the system in the organization for improved performance, right. Okay. So, that is what capability means. So, we have discussed three kind of assets, that is tangible, intangible and invisible assets. So, moving further, what we are going to discuss is that how we are going to look at it. So, remember we talked about tacit knowledge, okay, which cannot be copied or substituted, okay, but it is the most important that look forward, because you are going to see that your competitors are not lured by these kind of things, right. So, capabilities are invisible assets are the most important thing for the organization, right. Now, when we are going to say look at the market value, I think I have already talked about this concept, that market value is a combination of both book value as well as intellectual capital, right. Intellectual capital include, we have already talked about human capital, structural capital and relational capital. While when we are going to discuss about the book value, we basically measure the value of financial capital and also the physical capital. Okay. So, you can measure the value of land equipment, which is the physical capital. You can see that how much money you have, okay, in your stocks, deposits and these kind of things. Okay. So, that becomes your physical financial capital, and I have already discussed about that how we are going to measure the value of intellectual capital by quantifying different kind of capital that you have, measuring them, okay. And if you remember, we already talked about the process of measuring intellectual capital and creating intellectual capital index. So, the process goes something like this. First of all, when you want to measure intellectual capital, first of all you have to identify, and you need to integrate also both the book value, which is reflected through balance sheet, and you also need to look at the market value. Okay. Now, I am not going to be concerned with your this book value, but I am going to be more concerned with the market value, because market value consists of both intangible and invisible assets, and it is very important when you are going to measure intellectual capital index, okay, for an organization, you are going to create it. So, the first stage is that identify various indicators of intellectual capital, which would be related to your human capital, organizational or infrastructural capital, then it could be related to customer or relationship capital, and finally, you have social capital. So, these are the four major indicators that has been used. Now, under each of these capital, you have to identify what are the various indicators that you are going to use, 1, 2, 3, right. Okay. Similarly, for each of these capital, you are going to see what are the various indicators of this. Second stage, you are going to measure it. You can measure it qualitatively or quantitatively. You can use questionnaire, survey, observations, or if you have financial measures to show, you can use it, right. A measure of indicators, these indicators which belong to various type of capitals that you have, okay, and they could fall under either intangible assets or tangible assets or invisible assets, right. So, that you have to keep in mind. Now, once you have measured these capital, then the third stage you are going to quantify the value in monetary terms. What is the value of each of this? And then fourth stage, we are going to add that to create an intellectual capital index, right. So, that is how you go about it, and if you are going to include both, so this becomes your intellectual capital of the organization. Okay. So, if when you are going to look at the total value of organization, it does not include only the market value, the intellectual capital, but it also include the book value of the organization, which is going to see that what is your total value, and this value could be related to three things as I talked about it. It could be it could be tangible, it could be intangible, or it could be invisible, which basically nothing else but the capabilities of the organization as well as people both. include individual capabilities in terms of its tacit knowledge and organizational capabilities. For example, let us say innovative capability. Okay. So, this is how we are going to look at the value of a company, okay. And if the value of the company as such, in which include both book value as well as market value, and including all kind of assets, right, tangible, intangible assets, and individual. You are going to create an index for the organization and see whether this index is going up or not, and that is how you are going to create the value for a company, which is to be measured. So, the value of a company basically that is the market value, which basically includes both the current value of all commodities and securities, okay, and it includes both your book value and intellectual capital, which creates market value. Then what book value is? Financial capitals and physical capital, as I have told you, right, like bonds, shares, long term loans, physical capital like machineries, building and lands. Then you are going to measure intellectual capital, okay, like human capital, competencies for creating innovations, competencies, capabilities and leadership. Then structural capital, systems, processes, technology, culture, these kind of things, processes. Then you have relational capital, the value of relationship with stakeholders, customers and these kind of things. So, the branding, customer relationship and these kind of things. So, what I am trying to tell you that when you want to create the total value of the organization, you need to include both the book value as well as intellectual capital. Okay. So, you will be able to better understand the calculation. Then how come to know about the what are the various sources of the value? Okay. Through information on the brand names, logos, devices that you are going to use. Okay. What is the innovation, tacit knowledge and know how of the company and the people, right? Internal processes, business processes and systems, because they are going to provide you information about the value, right? How many joint ventures, distribution, licensing arrangements you have, which is easy to quantify, but there are certain things which is very difficult to quantify, which are more qualitative in approach, like the relationship with the customers, suppliers, investors, because this relationship is going to bring business to you, right? Because if you have good relationship with the customers, you will have repeat customers. Okay. If you have some good relationship with the suppliers, you get things on credit, they would supply a better quality material, right. If you have good relationship with investors, they have been getting good return on their stocks, right, then probably they would go on investing more and more. So, that is how you create value for different kind of things that you have in terms of capital in the organization, right. Now, if you look at some of the items that could be part of intellectual capital, which may belong to different kind of indices, whether it is related to book value or market value. Okay. For example, in the first category it is related to knowledge part, right, intelligence, learning, you have corporate university or a cultural diversity, or even cultural diversity could be used as a strength which create value. The customer capital, his knowledge, how much economic value is being added in terms of performance of the organization. Okay. What is the knowledge and skill base of the people in the organization, right? What is their knowledge and skill base. Okay. And the first column. Second column is basically related to, if you look at the efficiency level, okay, what is the value of the employees. Okay. So, you also need to calculate the value of the employees in accounting terms, right. That for example, if you know that what is the physical value of a equipment. Okay. Suppose you have a machine and you say that the value of this machine is 10,000 rupees, say for example, and you also have an individual with his knowledge set of knowledge, skill and competencies. So, can you quantify it and create a value for human resources? Okay. And there is a whole field which is known as human resource accounting, which basically try to use accounting measures, traditional accounting measures to find out the value of human resources, and then you can put a price tag that okay, this is the value of employees 2,000, 5,000, 10,000, depending upon the knowledge and skill base that employee has, right. It depends upon what kind of assets he has in terms of his knowledge, skill and experience. Okay. Whether you have expert teams, whether people they share their knowledge, what is the stock of knowledge. Stock of knowledge could be identified with the archives that is there in the databases, in terms of whether you have been able to manage your knowledge in a better way or not, whether you have a knowledge management system to actually transform your tacit knowledge into explicit knowledge or not. So, if you look at the archive of the databases or knowledge systems, you can find out what is the knowledge stock. Then you have look at the intellectual capital, kind of different kind of capital that you have. Then at the third column you can see the intellectual property, resources, your knowledge management system, right. human capital, values, culture, learning, these kind of things. So, if you look at this list of intellectual capital, it will give you an idea about the various items that could be measured to create an index, right, which could belong to either of these three kind of capital. Okay. That is human capital, relationship capital, infrastructural capital, intellectual property that is created, right, and customer and relationship capital, and also social capital. For example, culture is a part of social capital, right. So, if you look at this list of intellectual capital items belonging to this different kind of capital, and they are going to form assets. Some of them could be tangible assets, some of them could be intangible assets, some of them could be invisible assets. So, you are going to use both. On the one side they could be classified as one of the assets, and on the other side they could also be classified as one of the capital. Okay. So, you need to measure them. The second stage, if you remember, we talked about, once you identify this list of items which is going to be a part of intellectual capital, though this is not an exhaustive list and it cannot be applied universally blindly to an organization. In the context of your organization, you have to identify what are the various forms of intellectual capital that you have. Okay. So, you need to create an exhaustive list of items for your organization, and once you have created these intellectual capital items for your organization, at the next stage you are going to say that you classify them into different assets or different type of capital, and then you develop a measure of these items to indicate various type of capitals that you have. And once you have measured it, the third stage you are going to quantify the value in monetary terms, and then at the final stage, the fourth stage, you are going to add it up to create a index, right. So, this could be used as an indicator to tell you that what are the various type of capital that could be used. Okay. So, this is actually another important thing that I wanted to talk about, which is related to value creation process, that how people create value in the process, right. So, if you look at this, so human resource is the most important asset for any organization, okay. And this is basically an intangible assets, not tangible assets, because you are going to create not only value for the organization, but for everything else. Okay. So, if you look at this, it talks about two kind of value that is created, internally and externally, right. Internally, it means that you are going to create systems, tools, and what could be intangible in terms of a know-how, innovation or culture. Similarly, you also create external value in terms of products and processes and systems, right. And what could be intangible in terms of brand image, customer relationship, brand awareness, these kind. So, why I am discussing that the value of the role of HR is important here is that when you try to relate, when it comes to measuring developing indices or measuring and quantifying them, that is where the HRD professionals will have a very important role to play, because everything in the organization depends upon the kind of people that you have in terms of knowledge, competencies and these kind of things, because it is the people who create value in an organization, not machines everything. Okay. And people will create value internally or externally through intangible or tangible process, provided they have the competencies, okay, that is required for it. Okay. And it is the responsibility of the HRD managers to see through the various interventions that people are able to have those competencies to create value for the organization, either in tangible terms or intangible terms, right. And that is more important, and that is why we are presenting this framework here. Okay. And then what are the various dimensions that is used for measuring this? Okay. It could be quality in terms of time, okay. In terms of quality, in terms of quantity, right, in terms of cost. So, these are the four measures. For example, if you see the change in the time in terms of the value, okay. Quantitative measures are there when you are using certain financial measures, you are using cost approach, right, or you can also use qualitative approach as well. So, these are the four different kind of measures that could be used, and then how are we going to quantify, that is another important area that is to be discussed. For example, if you have financial measures of value, that is good enough, there is no problem. I mean, there is no question asked on how many patents you have which is creating revenue, that is one way to create value, or how customer contracts and these general contracts are creating values, right. So, you can go for these kind of financial measures, like what the number of licenses that you have created, franchises that you have, or strategic alliances that you have formed, because all this is going to this is added value produced by the group of people. So, the people are very important in the entire process, right. then you look at the replacement cost of the people. Okay. So, all this is basically related to financial measures. Now, we can also go for see that whether there has been change in the performance or not, okay. Because if they are going to add value, it must reflect in the bottom line of the organization in terms of increasing sales, better, more customers, right, more profit, better revenue, right, more R&D, more patents, more copyrights, right, trade secrets. We are going to more efficient in terms of quality, cost, and these kind of things. So, these are the bottom line figures. You have improved ratios, financial ratios. So, the idea here is that you it is not enough to add value, but you have to see that how this value creation process, which is the added value, is going to be linked with the performance of the organizations, and you are using these criteria to go for these kind of things, right. Then what challenges that HR people have here? We have been talking about this, like you have to say that how we are going to report intangible and invisible assets, because it is very difficult, painful process. And then you have to convince internal and external stakeholders about the need, and then you have to develop metrics and reporting mechanism. Okay. So, the chartered professionals have to ensure the development of a strategic role, what is their function in the process, how they are going to see that new skills are developed, and how it is going to create value for the organization, right. So, that is all, and that is how you are going to create value for the organization. Okay. So, there are some questions that could be used for this, like what are the various intellectual capital indicators which you are going to find useful, because not all of them could be useful. So, you are when you are going to select, only you select relevant and contextual measures. Okay. How many of them you are using currently, okay. How you perceive, what are the barriers that you think then for the development of these indicators, how you are going to use it internally as well as externally, both for managing systems and culture and processes, right, both for internal reporting as well as external reporting, because external reporting not many companies are using intellectual capital indicators as a part of their book value, right. So, these are some of the questions that you have, and then you have to see that whether you are able to compare the intellectual capital of your organization with other organization, provided you have used the same kind of measures, okay, and the levels are same, then it is possible to do it. So, these are some of the questions which is related to the measure of the intellectual capital. Thank you very much.